A significant stock market rally was ignited today, fueled by easing geopolitical tensions and strong earnings from tech giants like AMD. This rally marks a pivotal moment for investors and the economy, but what does it mean moving forward? Looking ahead, several possible scenarios could unfold following this rally. Recently, the stock market has experienced a notable upswing, primarily driven by optimistic earnings reports from key players in the technology sector. This surge has been particularly influenced by AMD's impressive performance, which has instilled confidence among investors. Analysts view AMD's success as a potential catalyst for further gains, especially as industry giants like Microsoft and Apple prepare to announce their quarterly results. If this positive sentiment continues, we may see a broader recovery in the tech sector, which has struggled through various challenges in recent months, including supply chain disruptions and fluctuating consumer demand. The geopolitical landscape will also play a significant role in shaping market dynamics. Ongoing tensions in the Middle East have created uncertainty, directly impacting oil prices and inflation rates. Rising oil prices have historically led to increased costs for consumers and businesses alike. If peace talks make headway, we could witness a stabilization of oil prices, alleviating inflationary pressures. Conversely, should the geopolitical situation worsen, it could trigger a swift market correction, causing investor confidence to waver and potentially leading to a downturn in consumer spending. Moreover, the upcoming Federal Reserve meeting is poised to be a pivotal event for market participants. Investors will closely scrutinize any indications regarding interest rate adjustments. Experts suggest that a dovish stance from the Fed, signaling a willingness to maintain lower rates, could further bolster market confidence and encourage investment across various sectors. In the coming days, all eyes will be on earnings reports from other major tech firms, as well as developments related to geopolitical tensions. A sustained positive outlook could provide the necessary momentum for a robust recovery, especially if investors adapt their strategies to navigate these evolving market conditions. The journey to today's market rally has been tumultuous. Over the past few months, concerns about inflation and rising interest rates led to increased volatility in the stock market. In early March 2026, the Federal Reserve indicated it might raise interest rates to combat inflation, which spooked investors across various sectors. This uncertainty was palpable, particularly for the tech sector, a major driver of market gains over the past few years. Tech companies, especially those heavily reliant on borrowed capital, faced significant sell-offs as rising rates threatened their future growth and profitability. Investors grew increasingly cautious, leading to a downward spiral in stock prices. However, the narrative began to shift in late April when lower-than-expected inflation data was released. This data suggested that the Federal Reserve might not need to act as aggressively as previously feared, alleviating some investor anxiety. Concurrently, AMD's preparations for a new product launch began to gain traction, signaling a potential rebound in tech stocks that investors had been closely monitoring. The combination of positive earnings forecasts and easing geopolitical tensions in the Middle East created a perfect storm for today's rally. Historically, similar rallies have occurred during periods of geopolitical stabilization, showcasing how external factors can significantly impact market performance. The key players in this scenario, including AMD and international diplomats, have their own motivations for success, driving the market towards today's significant upswing. Moving forward, analysts suggest that sustained market growth will depend on continued economic indicators, including inflation rates and consumer spending. Additionally, the global political landscape will remain a crucial factor in maintaining investor confidence. As companies like AMD prepare for their product launches, the tech sector may experience renewed enthusiasm, indicating a strong potential for recovery and growth in the coming months. The recent stock market rally has sent ripples through both the investment community and the broader economy. The tech sector, in particular, has experienced a notable surge, driven by AMD's remarkable performance, which saw its stock price rise by an impressive 10%. This spike is not just an isolated incident, it signals a broader trend towards technology-driven growth that has been gaining momentum in recent months. The performance of AMD, a key player in the semiconductor industry, highlights the growing demand for high-performance computing solutions, essential for advancements in artificial intelligence and cloud computing. As investors react positively to AMD's achievements, other tech stocks have also benefited, leading to a collective uplift in market sentiment. This renewed interest in tech stocks comes at a crucial time, as these companies have faced scrutiny due to previous supply chain disruptions and persistent inflationary pressures. Moreover, the optimism surrounding peace negotiations in the Middle East plays a vital role in shaping market dynamics. A potential reduction in geopolitical tensions could lead to more stable oil prices, alleviating inflationary fears that have plagued consumers and businesses alike. With lower oil prices, consumers may find relief at the pump, which could encourage increased spending on goods and services, thus stimulating economic growth. For the average American, this rally has tangible implications, as it may contribute to a more stable economic environment and job growth, particularly in the tech and related sectors. The ADP employment report released today supports this optimistic outlook, revealing an increase of 250,000 jobs in April. This growth not only highlights the resilience of the labor market, but also reinforces the idea that businesses are beginning to expand again, fueled by newfound confidence. However, investors must approach this rally with caution. The specter of inflation and the possibility of future interest rate hikes by the Federal Reserve continue to loom large over the market landscape. In light of these dynamics, it is essential for individuals to carefully consider their investment strategies and retirement plans. As the market evolves, staying informed and agile will be key to navigating the complexities ahead. Looking forward, the interplay between technology advancements and global stability will likely shape investment opportunities, particularly in sectors poised for growth in the face of ongoing challenges. On the morning of May 7, 2026, U.S. stock markets opened sharply higher, continuing a rally that began last week. By 10:30 a.m. EST, the S&P 500 had surged by 2.4%, while the Nasdaq Composite spiked by 3.1%. This rally was largely attributed to two main factors: a significant earnings surprise from Advanced Micro Devices, AMD, and a sense of optimism surrounding geopolitical tensions in the Middle East. AMD reported earnings of $1.45 per share, beating analysts' expectations of $1.30, which led to a 10% jump in its stock price. The company's robust performance underscored the increasing demand for advanced computing solutions, particularly in sectors focused on artificial intelligence and data processing. This shift towards AI technologies has been a transformative trend in the tech industry, influencing corporate strategies and investment priorities. In addition to AMD's strong showing, reports of potential peace negotiations in the Middle East contributed to the positive sentiment. The prospect of diplomatic discussions could stabilize a region long characterized by volatility and conflict. As a result, crude oil prices fell significantly, dropping 7% by noon, which alleviated concerns about inflation that had plagued investors in recent months. This decline in oil prices is particularly noteworthy because it suggests a potential easing of inflationary pressures that have constrained consumer spending and economic growth. The market's reaction today is particularly significant, reflecting a stark contrast to the volatility seen just weeks ago, when fears of escalating geopolitical conflicts and rising inflation led to a widespread sell-off. The combination of robust earnings and easing tensions has created a perfect storm for a market rally, marking today as a landmark day for investors. Analysts suggest that sustained positive earnings reports from major tech companies could further bolster investor confidence and fuel market momentum. Looking ahead, the outlook remains cautiously optimistic. The potential for continued earnings growth in the tech sector, combined with a more stable geopolitical landscape, could lead to further market gains. However, investors must remain vigilant, as unforeseen developments such as sudden geopolitical flare-ups or economic indicators could disrupt this upward trajectory. With the next quarter approaching, attention will be focused on how these dynamics will unfold in the evolving economic landscape, particularly within the tech industry. With the current rally and its implications, What do you think the future holds for the stock market? Share your predictions in the comments below, and don't forget to subscribe for daily deep dives into the most pressing financial news.